Hello, this is Martin from seekedge, the channel for learning about trading and investment. Welcome to the weekly technical analysis for the July 12th, Monday 2021, where we look at how the market performed last week and what lies ahead before us next week. So let's see what was the price action last week. So we can see that there is a bearish spinning top candle on the Nifty and a gravestone doji candle on the Bank Nifty. Both are bearish. Right, so basically last week Nifty and Bank Nifty both did a inverted V-shaped down move, right? That means it's moving up and then reversing last week. That's what happened in the daily time frame. If you see all the gap 5 candles, you can see that it was an inverted shape. So it's overall bearish. Nifty, Bank Nifty reversed from the previous resistance zone. So both of them had a resistance zone that we had clearly marked the previous week, and exactly the same point it again went and fall down. So Nifty, right, is currently at a major previous support zone of 15600 zone, and both the indices are at the channel bottom. Right? Anytime it can slip down the channel and then it can move further down. So the latest Nifty candle is showing a dodgy, the indecisiveness. Nifty has a dodgy candle, while Bank Nifty has got a hammer candle. Right, it's a red hammer candle. It is in a down move, so there is a potential that it can move up. That's what I indicate. But Nifty is very indecisive, dodgy. Alright, weekly wise, it is clear bearish candle for his spinning top and gravestone doji. Gravestone doji is clear bearish on the weekly. Now, Bollinger Bands, if you look at, you can see that there is a skews and it's in a narrow range. It continues to mean it is not broken, it has not spilled out, but there is clear volatility, contraction and consolidation is in progress, is clear from the Bollinger Bands. Let's see each of these charts. Now, here you see on the left side, Nifty is having a doji. A doji is indecisive, very small body, hardly can see, wick, very good doji, very bearish, very indecisive basically, not bearish. The market is not sure whether it does go up or break down or break out. So that is what clearly you can see. Bank Nifty, but it is showing a hammer. Hammer is like we have hardly any wick on the top, right? So there is slight bullishness. Hammer, whenever it occurs in a down move, it will work, right? So here you can see on the left side, hammer worked, it pushed it a little bit, but so if it is in a full down move, this is not a major down move, it's consolidation down move only. So if it is in a full down move, then it works very good. It will push the market upwards. Otherwise also it can push a little bit. So that's the difference between the candles and the daily. Now weekly candles, if you see, you can see that in the left on the Bank Nifty has got a spinning top. Spinning out it is bearish. Right, it is not exactly spinned off because the lower side wick is very less. So spinning top is very good when there is equal length of the wicks of the shadows, right? So here it is little less on, but you can still call it a spinning top, right? Which is slightly bearish. It is not fully on the top, but it's bearish. But on the Bank Nifty, you see that in the weekly chart, you can see that there is a gravestone doji, which is bearish, right? But again, it has to be on confirmation. Generally it is a bearish candle because very clearly you can see that there is a bear pressure. That is what the very long wick or shadow on the top of that candle, and very small wick on the bottom, almost not having any, and very small real body. So that is what it is clearly a bearish indication. But everything is on confirmation. A candle may work or may not work. It depends on where exactly but it appears. So here if this same gravestone is appearing on the top of all-time high level, then it is very dangerous. Here it is less dangerous. So there is high probability of being bearish, the candle to appear in the coming days is all that it can indicate. So that is about the weekly and the Nifty, the weekly and the daily candlestick patterns. Now Bollinger Bands, if you see, you can clearly see that it is consolidation. Anybody can understand that the market the volatility was expanding in a very wide range, and then slowly from the last several days you can see that the market is going up, down, coming down 5 candles, going up again 4 candles, coming down 3 candles. So that is exactly what consolidation is happening. Same thing is happening. So the Bollinger Band clearly says it is consolidation. So Bollinger Bands also will say when the consolidation is over, because it will start expanding like this, like it has done previously. It will clearly show the expansion. So Bollinger Band will tell you the full story whether it is sideways or trending. Very clearly you can understand from that, right? The volatility is what Bollinger Band is all about. Now let's proceed and see what are support levels and so on this week. So Nifty 15600 is a major level. 600 means 600 and 650, that kind of levels. That is where the first support is going to be, right? If that is gone, then 15500 is the next support. 15500 to 15250 is forming a range, right? Then if that is also gone, then 15,000 is the final level, right? So resistance is upwards. If it has to go up, no, then 750, 850 level, it is forming a zone. Then 1500 clearly a bearish zone. That is where it bounced last week. Now 16,000 all-time rounding number, so definitely that is also a resistance, right? Now this support zone of 15500 is also a Fib 23, Fibonacci 23, and support zone of 15,000 is also a Fib 50, right? And 15700 where it is taking support right now, it is the previous swing low and also a previous resistance zone. When we look at the Bank Nifty, we can see that 34,300 to 34,600 would be the next support zone further down. And if that is broken, 33,300 to 30, actually it is 30, yeah, 32,900. So that is the range supports, and then support, third support would be 32,500 to 32,000, right? Which is the Fib 61. Fib 61 is broken, means it's dangerous. There is clear indication that the back market is crashing. I don't think it is going to be at that levels anytime soon. And the resistance, if you see, 35,600 and 35,800 is what the previous resistance is there. Then above that it is 36,500, and then there you have 37,700 all time high. So these are three resistance clearly to be broken for the bank to move up. And Bank Nifty has got very good support at 34,000 up to 34,000 levels. It has got good support levels, what you can see, right? So that is what is resistance support. So the same thing that we discussed, we can see that in how we derived that is in this charts. Here you can see that Nifty has got supported 15. So it is 900, 800, 750, that kind of level is where it is multiple times, 1, 2, 3, 4, 5, 5 times it has gone and hit and then come back. In the middle also you have S1, right? Right now it is at the 600 levels. While Bank Nifty, you see, you have resistance all time high, then further down 36 levels, then further down 36,800 levels, right? And right now it is approaching. So there is there is a trend line there. It is holding the trend line. Nifty also is in a trend line channel, right? So these are all the support that you can see. That is exactly what we are seeing. Now if you look at the momentum and the trend, right, the momentum is sideways, right? So bullish, positive, reverse divergence and all that we had seen, right? That is all that did not work. It did not confirm and did not work. Yeah, so medium to long term, if you see, the trend of Nifty is bullish, but on a short term, which is a daily time frame, it is sideways. Bank Nifty also in the short term daily time frame, it is sideways, right? But in the it is weekly and monthly, it is having bullish momentum, right? ADX trend remains bearish in Nifty. Bank Nifty had moved to bullishness, now it is again back to, so both are bearish now, right? So the trend is clearly bearish on short term, and the momentum is sideways clearly on short term, right? For both the indices, Nifty and Bank Nifty, so hardly any strength, even if, right, the trend does not have enough strength also. That is what you can see here. So down here the RSI, if you see, it is turned sideways. Down here the RSI is turned sideways. Trend, we can see that the red one is the bearish zone, right? Strength is low, but right, that means it is not very, the strength of the bearishness is not great, but it is in bear, right? Similarly here it is just crossed over the Bank Nifty on the right side, right? Strength is down, that means there is a likelihood that again it will cross over to the bullish zone. So it's consolidation time, it will be like, there will not be, so this green one indicates the strength of the trend. See, the strength of the trend is low, means there is likelihood that it will keep on crossing over during consolidations. Now that's all about the charts and price action and patterns and supports and all that. Now let us get into the open interest data analysis. Open interest levels are showing that 15,000 is where the highest support zone is. Similarly, highest call rating is seen as 15,800, right? Now second level support, you can see that 600 and 15,500, 16,000. So basically it is going to be a movement between 15,500 and 800 most likely, right? And if it crashes, it can go to 15,000, and if it is going breaking out, it can go to 16,000. So it is in par with what you are seeing in the charts, also the same. Now the put call ratios come down into the bearish zone, so 0.6 for the bank nifty, and then it's a long unwinding, means people who have gone long is now going the other way. So it's bearish. Bank nifty clearly short build up, and PCR also is not good, but it's better than bank nifty, right? So open interest data wise, put call ratio data wise, bank nifty is slightly more bullish than bank nifty, right? Open interest analysis, now whatever we have seen, that levels can be seen clearly here in the charts also. So we can see that Nifty is having 15,800, 700 as the call rating highest, and 15,000 as the highest put rating support. Then you have interim 700, 15,700 and 15,600, 500. All these are small put rating supports that you can see. Overall chart is bearish. Here all over it is more bullish because the put rating of 35,000 is the highest, right? But 36,000 is the highest call rating. So yes. Sector watch. So IT sector, every sector, almost all the sectors corrected last week because it is bearish. IT sector corrected 3%, but still continue to be bullish. There is some weekly bullish divergence in the momentum that you can see. FMCG also same thing, and but it did not correct too much. Only 1% correction happened last week, and then weekly bullish momentum is seen there. So both of these are bullish, but as long as the momentum is kept intact on the short term also, you'll have to wait for the momentum to come back, and then the price is supposed to move up. Metal is flat, it is sideways, nothing much has happened, right? But other time frames, the higher time frames for metal, monthly and weekly, is very good. So definitely metal is going to come up. So wait for the momentum to catch up. Auto sector corrected a lot last week. That was big correction. 4% correction is huge. So it lost the momentum, because the week previous to that it had gained momentum and come to bullish notes. Now it has come down, and then it has turned sideways, right? So long term it will come because we because the monthly it is bullish, but in the short and the medium term it is this 4% correction has made it into sideways kind of sector once again. Pharma is corrected 2.5%. It had again, just like auto, it had moved up, but then slipped back. On the short term is in sideways, but other time frames are bullish. So IT, FMCG, pharma and auto have bullishness in it, but for the short term it is undergoing correction. Metal remains also is bullish in the higher time frames, but short term it is so it continues to be in the sideways zone. Now foreign institutions and domestic institution participation, if you see, foreign institutions sold 2,000 crores last week. Domestic institution who has been doing 14 days of continuous buying, you can see in the right hand side below, domestic institutions have turned sellers, and whatever they sold last week, whatever they sold, whatever they bought, they sold. So that's what happened. So they also, along with the FI, have become bearish. Is the reason why market fall last week, right? Derivatives data also is dipped. Net longs have dipped. The global markets, if you see, the US market ended green. There was some jittery movements that happened because of the corona delta wave. Markets went down, but managed to end up in a green candle on all S&P 500, Nasdaq, Dow Jones, almost all of them ended green. So there's a hammer pattern you can see in the US market indices. So there can be a further up move, is what it indicates. Dollar is has hit a resistance and looks like um, some reversal will be happening, right? USD INR is also at resistance, right? It is at the channel top. The weekly has got a doji, and weekly also has got a bullish divergence, right? So that is what USD INR is at the resistance basically. Gold bullishness continues, but it is again approaching the channel top, and there is a you can see that this is the weekly of the gold on the bottom right hand side. It is trying to break out of this channel. If it is breaking out, then it has come out of a major support resistance, right? And then it would be big move and may go back to the previous weekly high. Okay, so gold remains bullish. Yeah, so that's summary, right? So actionable VIX is a really low level. Small, so big VIX fall happened last week. We have seen that VIX had fallen 20%, right? Historic 11.1 was tested last week, but recovered and then ended up 12.9 levels, right? So that is something that we have to be aware on. So VIX is less, and it is so I know this week actionable. Put some, go for Nifty iron counter strategy because I am expecting that it will continue to between this 13 and 11 kind of levels VIX, and so there may not be a spike that may immediately happen. Is what it looks like for the next week. So that's why 15,500, 900 and counter resistant. Calendar taking calendar spreads, whenever the market is seen to be trending on bearish side also is not a bad idea, right? If the market is falling, then that means it will be trending falling, right? So that means we'll have to go with bearish spread strategies, no? And calendar spreads or normal spreads also, both will work, but because they are both hedged, so they are safe. So that any sudden up moves, reversals, and all that will not be too much of loss. So this is the payoff of the actionable of iron corner for the Nifty for the next week. Yeah, so the wrap up remains more or less the same as last week. It is narrow bound, it's consolidating, but now it is at a neck. Last week it was not like that. Now it is at a neckline support level of 15,600 at a major support zone which was tested multiple times. Just like how it was at a resistance level where it was supposed to break out. Now it is at a support level where it is supposed to break down. So you have to be very careful and trade with caution. Which is lower level, it can spike up suddenly. It can can be beneficial for sell buyers immediately, but unless it reaches a level to mean reward, it may not be beneficial for sellers. So that's the thought process. Momentum is sideways, trend is bearish for the short term on both the indices, right? Indices and buys is negative because everything, so the candlestick patterns and the V-shape reversal last week all makes the bias negative. Positional traders still not need to worry unless the 15,500 and 15,000 is broken. So if that is broken, then it is time for a correction and time for going the other short side, or positional long has to be exited, right? Till then there is no worries, right? So that's a wrap up of the weekly outlook and what happened in the last week analysis. I hope this will help and get you some clarity on how to take positions in the different stocks or the indices, basically. And yeah, so request you to please subscribe, like, and leave us feedback, right? We need more subscriptions. Kindly share it with friends, family members, colleagues, relatives, everyone. So, we promise to come out with better improved good content for you every week, right? So subscription will keep us motivated. Thanks for watching. Happy learning, happy trading.